This is the Doc and Eric Dubin with the SD Weekly Metals and Markets. Joining us this week on a special 4th of July edition of the Metals and Markets show is contributor to Silver Doctors, contributor on the side of the Gold and Silver COT Reports Weekly, one of the most popular contributors, Marshall Swing. It's great to have you here, Marshall.
Thank you, Doc.
Well, we had the big NFP release early Thursday, just ahead of the holiday. Payrolls surged 288,000, above expectations, at least the official announcement. Unemployment rate, the official one, dropping to 6.1%. We had actually gold and silver selling off into the announcement and a typical smash right on the announcement, but then they've recovered and retraced all of those losses with strong move off the lows throughout the second half of the COMEX session. Now we're getting to the access market hours here on Thursday, and silver's kind of trailing back towards 21, but about a 50-cent move off of the intraday lows, and really almost following its algo pattern from Wednesday's trading. And then in gold also, we had a smash down towards 1,300. Bottom was around 1,310 and recovered back above 1,320, but it hasn't been able to recover Tuesday and Wednesday's highs. Both Tuesday and Wednesday, gold was knocking on the door of 1,300. Thursday actually briefly trading above 1,330. We're going to close above 1,300, but off of the highs for the week. So what's your guys' thoughts here, Marshall? Are we going to see a bit of a retracement here over the next couple of weeks? I know that for the last few months, you've still been predicting a big smash to come before the big move in the metals. What's your take?
On the non-farm payrolls, my first question would be, how many of those are high-paying jobs, professional jobs, whether they are in the manufacturing sector or whether they are in various professional sectors? You know, how many of those are well-paying jobs? My guess is most of those things that we are seeing are in the service sector that are low-paying, and that merely putting people to work in those sectors is not, by a long shot, going to come close to anything to healing this country. But what we're seeing is just an influx of capital flows, like Martin Armstrong said would happen, and those capital flows are creating positions, apparently. But when you look at the health of the people in the country in the long run, we've obviously got a tremendous problem. And all other kinds of information tells us those things. But what we don't see is the mainstream financial media disclosing facts that we see at Shadow Stats or other places about, or even the St. Louis Federal Reserve's graphs about employment versus population. I did see one article at other places recently that discussed, we finally got back to unemployment or employed levels at a pre-crash, but since we've added on millions and millions of people, now we have, of course, all of those who are unemployed. There's been no catch-up in those jobs, so this article said we need 7 million new jobs before we even get back to what truly was par in 2008.
No, it's more than that. It's more like 15 to 20 million, actually. And it gets back to what you were saying before about the quality of jobs and migration to the service sector versus manufacturing and whatnot. And the report for the June full-time, part-time versus full-time versus part-time jobs that were reported this morning. It's pretty darn interesting because the numbers belie just how big the difference is in part-time jobs, which added 799,000 versus, 799,000 versus a decline of 523 full-time jobs as reported by the June household survey, which is just phenomenal. I mean, it's amazing that, the market would first react negatively and then shoot out of the gate, because basically what this is speaking to is the realization that the economy is nowhere near as strong as it was, And frankly, it's kind of following that thesis I started developing in November, where by midsummer we were going to start to see the economy roll over enough to where the tapering would stop and some other form of stimulus would come in. And I spoke a lot about student loan forgiveness or some other program. That's in fact already come into play. They're arguing about that in Congress right now. And I fully expect that within the next 2 months, some other forms of dealing with the economy's slowdown and inability to create jobs will come out of the Fed and the policymakers in the Treasury. And this is the first reaction to that kind of picture becoming more widely understood by the people on Main Street and Wall Street. You can see it in the price action and in gold and silver and stock market, and basically everything is pricing in reflation trade with the expectation of an easier Fed going forward. And that's the message that we see today in the markets.
Now, getting back to the metals here, Marshall, with gold and silver very near multi-month highs, a lot of people are starting to get excited again about gold and silver. So what's your take? Are we going to see a continuation of the move really to, at least in silver, back to 26 at the end of the year, and gold back to that, at least to test that critical 1600 level? Or do you think we'll still see a big cartel smash that you have advocated previously? What do you see the market looking like right now, Marshall?
Well, my first comment is on what you said initially, that many people are starting to get excited. And the reality, however, is different. What they should have been excited about was when silver was at 18 and gold was at 12.50. That's extremely exciting to me because it's a buy opportunity, and it's a buy opportunity of a lifetime. That aside, which is just a technical observation by me, what I am not changing any of my predictions as far as we have a crash that is to come. I think that crash coincides with the economic collapse next year. The crash could come prior to or just before the economic collapse, and that'll be a worldwide economic collapse. Those who heard or have heard my interview on True News yesterday, I made a statement on TrueNews.com on the interview there with host Rick Wiles, and I declared that next year the economic collapse happens around the start of Daniel's 70th week in biblical prophecy in the books of Daniel and Revelation and described other places. And I made that with as an official announcement, by the way. But what I am saying is that the crash is coming. We have hundreds of writers who write about the crash that is coming. They know that it is coming. There's nothing that anybody can do to stave off the derivative bubble that exists throughout the world, whether it's $1.1 quadrillion in a bubble or $1.5 quadrillion in a bubble. I suspect that it's even higher, that there are derivatives out there that aren't even reported. That would be my guess. We know in the silver and gold industries that there is relatively tiny amounts of physical gold and silver that are in the COMEX warehouses, upon which 100 times to 200, maybe as high as 250 times as much paper derivatives are based in futures betting on top of those. Now, connected to those derivatives or those fiat bets, naked shorts, if you will, we have all kinds of things that we aren't told about, which are derivatives, and there is a lot of counterparties out there who purchase those derivative bets, and those are probably connected to gold and silver as well as to all other kinds of hard assets. And it's just like a spider's web that covers the whole financial sector of the world. And nobody is without protection unless they hold a physical hard asset in their possession and they have paid for it in full. So there is no protection beyond that when the economic crash does come. Me seeing Silver at 21.17, I think I saw just a couple minutes ago, is not even a wave for me, because I said in an article about 3 weeks ago or 2 weeks ago that I fully would not be surprised if we saw price rise, because what we had seen was a wave of speculator positions taken as shorts. So when the bullion banks see all these short positions being taken by the speculators, they know that they do not want to crash the system right now. They have an appointed time next year that they want to crash the system, and if it were to crash now, they don't have their act together to do the things that they intend to do. So what they did is they drove up silver and gold price here in the last couple of weeks, or 2.5 weeks, and they drove it up so that all of those speculator shorts, that their trading stops would be tripped and that they would sell. And at the same time that they were forced to sell, of course, they didn't sell at the price where their stops were tripped. The price went up too quickly. They had to sell at higher prices, and they lost a massive amount of money. We've kind of leveled off right now, and I fully expect that, we're going to see the same kind of, I call it a depression set in, and we'll see a gradual decline in price. It does not appear to me that the bullion banks want to take any more shorts from the speculators, but they want to give those speculators who are betting on the short game, they want to give them hope that the shorts that they do have right now are going to pay off in the long run, and that they'll continue to hold them. And that's my take on that.
Now, just to clarify for our listeners, Marshall, if we do see a complete collapse of the Western financial system in 2015, what is your thoughts on what that'll look like for gold and silver if we do see a crash? Is silver headed back to 8 and below, and gold back to, 650-ish or lower? And if we did see that again, do you think there'd be any physical available? Because I personally don't think there would be.
I agree that there will be no physical available at the time of the crash. However, prior to the crash, there's going to be a tremendous amount of fear generated, and the majority of free capital in the world, cash, the majority of that cash is going to try to rush into gold and silver. They will come searching for physical, and when they find out that there's no physical, they're going to go straight into the futures. And that is going to throw gold and silver to astronomical prices.
So basically a smash and then a rally to record levels.
Yes. And when I say record levels, or you say record levels, I think we could easily be talking about $100, $200, $500 silver. We could easily be talking about 10,000, 15,000, 20,000 gold.
Yeah, I think if you did see a complete reset of the system, those are not unreasonable numbers. What's your take, Eric?
Sure. If we have derivative crash and unraveling of the global economy, then there really is no particular target that's unimaginable for gold and silver. And most likely, in fact, would be the closure of the COMEX system and the LBMA and bank holidays and things like that, and then true physical price determination would be discovered.
Now, what's your take, Eric, on the market trading here over the past week? Are we looking at, let's say, a short-term or intermediate top here and a potential retest of that $20 breakout in silver, or is the rally going to continue another couple of weeks?
Markets are a dime a dozen with opinions for all, and I'm going to take a different short-term and intermediate-term take than what Marshall has. I believe that we are just merely drifting through a period of consolidation, and we're going to go higher still in the month of July. In fact, in July, we're going to probably test $25 silver and get over 24 and float in there, and gold over 1,400 in kind as well. And it's going to surprise people because this is in the traditional summer doldrums period, but the degree to which silver was smashed down earlier this year, and gold as well, is the setup for this to happen, combined with the continued strong demand in Asia and India coming back online, and the geopolitics heating up, and all of these factors, and the economy rolling over, and people believing that the Fed is going to be more accommodative in the not-too-distant future, on and on. In early June, people were fearful that a big correction was starting and that prices drifted down and down, and we went to those $18 and $12.45 levels in silver and gold, respectively. I believe that in fact was the correction, and ultimately consolidation that's going to lead to our next launching that we are in the process of moving through.
I want to shift gears a little bit here and discuss one of the stories affecting precious metals markets, well, really a lot more than that this week, and that's the JP Morgan CEO Jamie Dimon being diagnosed with cancer. We were kind of chatting before the show a little bit here. Maybe we should put a friendly office pool on the table about who is in line to replace Jamie Dimon as CEO of JP Morgan. Marshall's thrown out there that he's expecting Blythe Masters to make a triumphant return. I'm going to throw out a dark horse and wouldn't be surprised to see the Fed's Bill Dudley be set up for it. What's your guys' take?
It's an interesting name, actually. I vote for Bo, the White House dog. Maybe informed by Milton Friedman's acting mode. Just set a credit expansion at a fixed level and go away. None of this interest rate nonsense discussion that happens at the FOMC meetings. Get Bo, the office dog, in there.
So that would be that'd be the Prez's first choice, I suppose.
Yeah, well, that redefines the term lapdog. JP Morgan would definitely be in Obama's lap, that's for sure. No, but Doc, it really is. It's just idle speculation. We really will not know until the name's announced. But Dudley is as good of a speculation as any.
Yeah, I think precious metals investors, kind of somewhere down deep, they're kind of rooting for Blythe just so they have a villain that continues at that post.
Well, when I say that, when you said that I'm expecting Blythe, I'm not expecting her, but I'm suspicious that she could be the one. She is the one probably more responsible than anybody else for the health of J.P. Morgan, in my estimation, through both the commodities, but even more so through the gains that they made with regard to derivatives. So I don't think anybody else, I mean, that was her baby. That was her idea back in the 90s, or was it the 90s or the late 80s that was contrived and then came into fruition later on in the 90s? Do you know the dates of that, Doc?
Not off the top of my head. It sounds generally correct.
It was birthed in a meeting at the Fontainebleau Hotel in Miami. I had read about that, where the whole idea of derivatives was birthed. I've been to that hotel and stayed there before at a conference, and it's just a beautiful old place. But I think that in a way, she is more than anybody else responsible for the health of J.P. Morgan in the last 15 years. And I don't think the outside financial media attributes that to her particularly.
Well, it certainly would be beneficial to the company in terms of getting somebody who would know where all the skeletons are buried, and Blythe knows them all. So, that's like a clear advantage to putting a criminal in charge of a criminal operation. But the thing that I think makes it unlikely is that in that very history, she's known by too many as being involved with a lot of the crimes that J.P. Morgan did, and the one that was most clear in the eyes of the judicial system was the energy manipulation with FERC, coming and determining all the various things that J.P. Morgan had done in terms of manipulating energy derivatives, but her footprint was pretty much in the entire derivatives complex, as Marshall discusses. And I did look up, when I think was her first major entry into that space for J.P. Morgan. I think it was back in 1994 when they helped do a line of credit to Exxon. So, the bottom line is that there are so many people that J.P. Morgan's board of directors can turn to that don't have the kind of baggage that she has. So, though she's qualified and though she, would be likely to, be a positive for the net bottom line of J.P. Morgan, the reality is that she's damaged goods, and someone else is most likely going to take that seat. But it's J.P. Morgan, so we never know. They continue to surprise us. So, Doc, I think we really should put together a big greeting card together with all of the active users on Silver Doctors. Everyone can sign it electronically and send it along our ways for the best wishes
Mr. Diamond?
for Jamie. Yeah.
I noticed on
we miss him if he left the moral plane.
I noticed on a report of the news that pretty much every reader of Silver Doctors was thrilled that Mr. Diamond had decided to undergo a traditional chemo and radiation treatment. Not sure what that says about our system, but
Doc, you can probably speak to this better than anyone else, but my understanding, while it might have a 90% cure rate, anytime you undergo the chemicals in a chemo treatment, that can negatively affect your immune system, and a person could easily die of something altogether different. Is that correct?
Yeah, that's correct. And the radiation as well, the chemo and the radiation really inhibits the immune system. And that's why when you're being treated for any cancer with chemo and radiation, the incidence of a new cancer skyrockets versus someone who's not undergoing treatment. And also kind of medically from Mr. Diamond's case, well, the letter and the press report seem to make it look like, oh, no big deal, we caught it early. It's technically stage 3 because it's in his lymphatic system, so that's not a very good sign. It sounds like it hasn't spread throughout his whole body and metastasized to any other organs, but anytime it's in your lymphatic system, that's basically the carrier throughout your whole body. It just hasn't seeded yet, so it's really actually not a very good prognosis. It's not stage 4 with mets, like say to the liver or the colon, and now you have active cancer that's metastasized to the rest of the body, but it's in his lymphatic system, not just topically on the throat. So it is a little bit more serious of a cancer case than the letter and press release would make it sound if you don't have any medical background or training.
My only medical background is having formerly been married to someone who had a medical background, and then, of course, as you know, I recently was remarried in the Philippines in May to someone, a beautiful Filipina who is a head nurse at a doctor's hospital. But of course, I haven't taken the opportunity to discuss this with her, as she does not do oncology, although they do have some cancer patients at her hospital. So these things, that's very interesting to hear. I'd not even heard that it was a lymphatic system issue.
Yeah, there wasn't much emphasis on the fact in the report, but if you read the details, it was included. All right, we wanted to give our listeners a quick update on the physical market here in the U.S. before we wrap up the show, and really haven't seen too much of a change over the past week. Really across the spectrum, gold and silver retail investment products are readily available now. Even all of the private rounds, even the sunshine rounds now are readily available. 90% silver has really freed up from the tightness we saw over the first 6 months of the year, with silver moving up off of 18 and above 20. We've finally seen some sellers of 90% and a good decent supply come back into the market. So that's helped with availability, and it's helped bring premiums down as well. And again, with the official mint coins like the Eagles, the Maples, the Philharmonics, and everything else across the board, pretty readily available right now. So I agree with Marshall. The best time to buy is when silver was trading around 18 and gold was under 1,200. But still, from a long-term perspective, we still haven't moved very much off those levels. And with premiums at historically low levels, it's still, in my opinion, an excellent time to be accumulating both of the physical metals, gold and silver.
Agreed.
for an insurance position. And if things like what we're describing happened in 2015, the difference between silver at just over $18 and where it is today is pretty much meaningless. And the same for gold.
Exactly, yeah.
It's important to have insurance position when it comes to your core holdings in precious metals to be able to weather storms that are very likely in our not-too-distant future.
Well, Marshall, it's great to have you on the show. Thanks for joining us this week.
I loved it. Reluctant, as you know, in the past to begin doing interviews, and felt like I needed to provide people a solid basis in predicting price movements before I started doing interviews. But I love to be here, and anytime you want me back, you know my phone number.
All right, so you can check out Marshall's regular reports on the COT reports in gold and silver at silverdoctors.com. So for the Doc and Eric Dubin and this week's guest, Marshall Swing, thanks for tuning in to the SD Weekly Metals and Markets.
Those individuals who are in charge of monetary policy around the world, I think they're very much aware of what is coming. When I've asked Federal Reserve Chairman in the committee about this, they never said, no, that's not going to happen. They use the word orderly. As long as it's orderly, it seems to be okay.